Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and on this special edition, our focus is on the Q3 earnings. The company on our radar today is Mahindra Logistics. The company posted a net loss of to the tune of 17 odd crore rupees for the third quarter. And in the corresponding quarter last year, Mahindra Logistics had posted a profit thereof. So it slipped into losses this time around. In fact, the company's revenue from operations have also increased, to 5.1% or to 1397 odd crore rupees against 1329 odd crore rupees in the corresponding period of the preceding fiscal. At the operating level as well, we've actually seen that the EBITDA has declined about 17% to 52.2 crores in the third quarter as well. Now, to discuss more insights from the current quarter, as well as to share more outlook with us, I have with me the top management of the firm joining in. Mr. Rampraveen Swaminathan joins in. He's the MD and CEO of Mahindra Logistics. Welcome, sir. Good afternoon. And thanks a lot for taking the time out for this discussion. First up, I'd like to understand from you, what really led to the pressure on the bottom line? And is this a one-off? Do you see this as a continuing pain? Because even in the 9 months period, you are actually, on the losses front, both on the bottom line as well as on the operational level. So could you explain to us the key reasons there?
So it's actually you've got to look at our earnings in two parts. There is the more stable organic business, and then there's the impact of the acquisition we made last year. And so on a year-on-year basis, as well as sequential quarter basis, the earnings from that acquisition continue to be on our results. And excluding that impact, I think you would actually see our businesses are in a fairly decent shape in terms of earnings quality. They are run rating to past levels. That acquisition, which is the acquisition of the express business from Rivigo, we acquired that business knowing that we will have a burn and we will take time to turn around that business. That business is in a turnaround and scale-up phase, and we expect it to be EBITDA positive by through the first half of next year,
Okay.
and hopefully be back positive on a run rate basis, through the full year by the end of the next fiscal year. Excluding that, your gross margins and EBITDA is actually fairly positive. In fact, year to date, on a 9-month basis, our gross margins and our EBITDAs have been up by around 100 to 122 basis points on the rest of the business. So I think that's really the big call out in the business, which has impacted the earnings. And that's something which we are cognizant of, and we are working towards improving that business is improving on revenue and margins on a quarter-on-quarter basis, and hopefully she will be at that point in the next couple of quarters.
Okay. Sir, could you help us understand on this acquisition, what is the sense that you have in the kind of contribution that this acquisition can make in terms of top line and bottom line over the long-term period? And by when will it start to meaningfully contribute to your top line?
Yes, I think the business right now, it finished the quarter at around close to 90 crores of 96 crores of revenue. So it's around 7% of our overall business in terms of revenue. Of course, it has a disproportionate impact on earnings. We look at this business being a very strong business from and standalone basis. The B2B express parcel business is a market which is growing at a fast pace, and with increasing infrastructure quality in India and increasing densification of demand, your demand will become more and more part truckload, and that I think is an interesting and very exciting segment for us to play in. In addition to that, I think there's a lot of synergy to our solution strategy. And therefore, over the next 3-4 years, we do expect this business to probably scale up, probably grow probably 2.5x from where it is today on a standalone basis, but also contribute to the larger strategy and therefore have a bigger rub off to the broader earnings of the company. This is a company, as you know, we bought in business at a fairly attractive valuation, and we index that for the investments we'd have to take to turn around the company. And the business is just in that phase, and it'll get through that over the next few quarters.
Okay. Could you also break down for all our viewers, how have your various verticals performed this quarter? Your e-commerce business is a large chunk, which contributes about 18-20% odd to the top line. And of course, the other segments as well. If you could give us a breakup.
I'll just go on our reporting basis, Sashi. So I think our the 3PL supply chain or contract logistics business grew roughly 5% year on year. It was a good quarter actually, because we have had in the preceding quarters, as we had disclosed, we had a fair amount of consolidation by our customers or insourcing by our customers, which resulted in a drop in orders. and we're able to offset that and grow by 5%. A really strong quarter in terms of order intake for that part of our business. That is around 80% of our revenue, and therefore is well poised from a growth perspective. The last mile delivery business is largely serving the e-com market today and got a lot of tailwinds from obviously the festive season. Revenues are up, right? As you know, our overall e-com volumes since the festive grew by around 20% on a sequential quarter basis. So that was a healthy thing. So last mile delivery business, we did complete and transaction in that space. So therefore, we are consolidating that business, and it's again well set up. The freight forwarding business, of course, has been struggling over the last 5 quarters with global headwinds. I think on a positive note, this quarter, sequentially versus Q2 versus Q3, we did actually see revenue growth and volume growth. So I think we think that markets kind of bottomed out now. On a year-on-year basis, that business was down 24%. But on a sequential basis, it started turning back and going back up. And the mobility business has turned down in the last 3, 4 quarters. So at a constant level, we felt good about most of our individual businesses. There are obviously some moving parts in those, but we felt that all of them are good. It's the Express acquisition has to accelerate the pace of the recovery or the consolidation, and we should then get back to the 7.5%-8% EBITDA levels across the board, which we are without the Express business, and far stronger earnings run rate.
Okay, and on the margins, could you share the outlook? Where do you see the margin band going forward from here for FY25 as well?
We don't give specific outlook, but as I said, I think there are two big parts to it. I think obviously volume growth should be there in the third-party contract logistics business and the last mile delivery business. We normally see leverage as that volume comes through, right? And we are also making warehousing capacity additions to support that
Yeah.
growth. And of course, we do expect to see the acceleration in express losses, which today at an EBITDA level are probably around 18-20 crores a quarter. We expect that obviously to substantively shrink through the first half of next fiscal year. And so those will be the two big lifts from a profit perspective. I don't generally give guidance, but that's kind of what we think will be the drivers for profit growth.
Okay, on the expansion plans with the kind of warehousing plans that you have, especially with New Nashik Place, could you give us some more details? What is the kind of capex that you're planning in? And would you also need to raise some funds going forward for this expansion?
Today we are around 20 million square feet in terms of capacity, including what we do for our express own internal express business. We have around 2.5 million square feet in construction, a million in the northeast, east and northeast, being Kolkata, Guwahati, and Agartala, which is under construction right now. And then we've got a million plus roughly in the Maharashtra region. We've got construction going for 500,000 in Chakan. We just announced groundbreaking for 650,000 square feet in Fulton.
Okay.
And last week, and of course, we also announced a 5 lakh square feet expansion in Nashik. So together, we have around 2.5+ million in construction, and those would kind of come out over the next 12 to 18 months. We generally don't own our own warehouses. We do long-term leases on them, and therefore it's not capital intensive to the context of a developer, right? What we do obviously is spend capital assets inside the business, inside the assets, which is for automation and mechanization, and those are all largely internally accrued. And we got that well covered, and therefore there should be no issues there.
Okay. Could you help us understand the macro demand scenario in terms of the sectors of the economy? Where exactly are you looking at strong demand from, and where exactly is there sluggishness still?
Yes, I think the automotive business is plateauing. I think continues to grow year on year, but obviously we are seeing a sequential plateauing on there, especially in passenger vehicles. I think this quarter we remain optimistic about the farm sector as a whole. There will be seasonal movements, but we remain optimistic about growth coming from there. I think outside those two businesses, which are large constituents for us, we do believe e-com has gone through a period of consolidation on capacity, but we are now starting to see some green shoots there, and we expect that will actually accelerate. Digital penetration in India is still pretty low, and therefore we should continue to see that roll up. This is just a capacity correction by marketplaces. And on the consumer and manufacturing side, we are seeing some real fillip, right? The consumer space still is not growing dramatically in terms of volume, but we are seeing some positive trends. As you know, in the post GST, there was a lot of focus on network consolidation, and that's finally beginning to happen. A bit late, but it's finally starting to happen, I think, post COVID. And so we are seeing some acceleration there. So we are seeing that broad sectoral kind of growth. It's not one specific thing. Obviously, across most of the segments, I think volume is trailing value. And what I mean by that is the more segments are premiumizing in terms of demand consumption. And therefore, we do see that pattern, right, in kind of what we move and fulfill across in our business too.
Okay. So you had initially kept a target of internal target of 10,000 odd crore rupees for your overall revenues. Would you be on course to achieving that by when, or are you making any tweaks to that?
No, I think we set a goal, saying that we want to be in that range, and when we picked up a year, obviously saying that's an aspirational target. I think we're well poised today, even today, to be in that range. We have a combination of businesses, and some of the smaller businesses actually are going to get to see the hockey stick of growth. So give or take, a few quarters here and there, we still feel we're very well poised from a revenue perspective. Obviously, from an earnings perspective, we are continue to work that. Obviously, there's one big piece now which I talked about. But barring that, we are continue to focus on growing earnings. So we still feel very good about our the deck of cards we have, right? And our ability to kind of play the game and get to the point where we had kind of said we would.
Okay. Would you also share with us, on exports, the demand internationally? Are you looking at tapping more of that now? Are things looking up?
Yeah, well, so our freight forwarding business obviously started seeing some volume growth, and interestingly, yeah, it is seeing more. I think it started seeing some good, better growth on the outbound side or the export side, right? But it's still very early to kind of pick a secular trend around it. I think markets have been depressed, but volumes are growing, and I think there for us at least, our big sectors have been electronics, manufacturing, and pharma, and we continue to see believe there's some good growth prospects in all of them.
Okay, well, with that, thanks a lot, Mrs. Swaminathan, for sharing all these insights from your quarterly earnings. All the very best for you for the upcoming quarters as well. And here's hoping for more interactions going forward.
Thank you very much.
Thank you. And with that, we wrap up this special edition and the conversation with Mahindra Logistics top management. They are firm about, sticking to the targets of growth on the top line going forward from here, and things looking up when it comes to talk about the demand scenario, especially both domestic and internationally going forward from here. We'll continue to get you such exciting conversations around the earnings, so don't miss anything. Good. Stay with us.